Welcome to Bitcoin Escape Plan. We've just seen a major momentum shift for Bitcoin, and in today's video we're going to go over the key levels that we need to see hold in order for that upside momentum to continue for Bitcoin. A little bit later on we'll go over the higher time frame, so we have the historical context for why the price is behaving the way that it is and what gives us evidence for the future momentum of Bitcoin at the moment. And then at the end of the video, I will go over these local trade setups and coverage of the trade that I am currently in, just so people who are newer to trading perpetuals and leverage can have a better understanding of the process. If you are new to the channel in general, you can go check out bitcoinescapeplan.com. Every Monday, I release a newsletter that goes into depth on all of the key time frames, just so you have an adequate picture of what the price is going to do over the course of the week if you don't have time to listen to me ramble in these videos. bitcoinescapeplan.com, go check it out. All right, back to the chart, 4 hours. Let's see what's going on. This is Tuesday, we had an interaction with the downtrend anchored VWAP. Once again, this is the bottom band extending from the 126 all-time high in October. This is very important. Anytime the price behaves around there, we need to pay attention to what it is telling us. Essentially, price wants to continue to break down lower, but as it gets pulled toward it, this is a good sign for us to be closing right on it. That means we have another push towards the upside, and pretty much we're just going to see, can it get higher than that last one, or does it need to retest that band once again? And if you kind of think of it as like it's essentially a magnet. Like this line is magnetized. This line over here is magnetized. And what we're waiting to see is if we can get enough of a charge to bounce off of this line and head towards this line. This is 84, call it 84.5 roughly. That's the middle band of that downtrend anchored VWAP. And that's essentially what we're waiting to see if we have a strong enough reaction off of this bottom band that can actually send us towards 84.5. Now I will go over that later on in the higher time frame, but I don't believe that we're going to see that high. Let's take a look at the 4-hour chart and see what is going on. So these are recent daily closes. That's what those horizontal lines indicate. This is the 70.4K pivot. This is the most recent Fibonacci pivot that has reopened. Slightly different than the 70.8K pivot that you might remember we've talked about multiple times. And as you can see, 70.8K ended up being a daily close as well. So it remains important and relevant, even if the Fibonacci pivot is regarding it as a little bit lower now. Pretty much anytime we see multiple candle closes at the same levels on the higher time frames, it's an important level and we need to pay attention to that. So 70.4K at the moment is holding strong after we had a slight break below that and the 4-hour SMA. As you can see, 4-hour SMA is already sloping upwards again, which is good so quickly after. That was a very short break. I mean, that's a period of 12 hours, really like 8 hours essentially, that it actually interacted with the 4-hour SMA before it was already back above it. Whereas all of these instances, it chopped for a while or chopped right through it. So pretty good for us to see it shoot right through it and then spend a very short amount of time back at it, have a strong reaction off the bottom band of the downtrend anchored VWAP, and then immediately go back to the upside. That's why I'm not too worried at the moment about my trade. I do still think we're going to see upside, or at least enough for me to get out in a small amount of profit. So 4-hour chart, that's what we're looking for at the moment, is this 4-hour SMA is going to continue to rise. If it can rise above 70.4K before we actually interact with it, that's essentially going to make any negative interaction with the 4-hour SMA potentially have support at that 70.4K level if it rises above it. Again, if we break down into it, this may actually be the support that allows us to break back above it. So it kind of just depends on which one hits first, the price or the 4-hour SMA. But it is sloping upwards. Granted, it's sloping upwards after significant chop to the downside, but basically as long as we're above this blue trend line here, we're chilling. The price is slowly grinding higher, and it really won't be until, I would assume, towards the middle to end of April, like absolute, like last call, the bar is closing is April 21st, it looks like, where we will have a definitive momentum decision between the price trending higher or breaking back down below. It's my anticipation that we will probably see a break above the red one that ultimately results in a break below the blue one. Because if we look at history, and I will do that again a little bit later on in the video, it just like overwhelmingly favors continued repeated failures of the weekly SMA during this time of the year. And as far as I'm aware, none of the crypto market structure bill stuff has been absolutely finalized yet. So the money is not going to flow into the markets until next year. And I'll ramble a little bit more about my opinion on that later. So at the moment, 70.4K is what you want to pay attention to on the 4-hour time frame. We've got a couple daily closes in there as well that are going to be somewhat important for the price to react to. But essentially 70.4 and 70.8 are the important ones. And then as long as we stay above that downtrend anchored VWAP, which is currently sitting at about 69.2, 69.3K, we're chilling, and that's pretty easy. You can just drop an anchored VWAP tool onto the 126 all-time high in October. Very easy to do that. And let's look at the higher time frames. Let's see what's going on for Bitcoin on the higher time frames. So pretty much the same story. I've been repeating it for several weeks now. We want the price to be above about 70.2K. It currently is just barely above that. However, we don't want the month to close there. We really want the month to close closer to 76.2K. Really, it's just the weekly where it is acceptable for us to build up some momentum and be closing at around there so that we can build towards that 76.2K and break through it. However, the weekly SMA is already down to 80.8K. Been talking for weeks now about the possibility of the price rising as high as 86K. However, it is hard for me to believe that that is going to happen at this point. I think that the weekly SMA is going to continue to get dragged down lower. And by the time we actually have an interaction with it, it'll be so minor that the price is able to break past it that we'll be lucky if we see 80K or past 80K. That barring, again, I have talked for several weeks about the possibility being 86, but 86 I think would just be a temporary breakout. It would be a wick, not a close. That is still my best case scenario for right now. It is hard for me to believe that we're going to get above that. And that would be important because as you can see here in March, April or just March, I guess, 2025, those closing candles are right about there, right at about 86. So essentially we would see failure for the price to get above both the support levels in November, December, as well as the resistance levels that were set in March of 2025, which were broken. But now we retested them and broke them to the upside, and then retested them and broke them to the downside. And now we need one more confirmation of, can we break above these or not? So the days of dreaming of the 96K pivot, I don't think we're going to see that anytime soon. We probably will not see 96K Bitcoin until, I would imagine, sometime next year or possibly 2028. Probably sometime next year, but I personally do not believe we see it this year. I think that this 97.9K peak in January is probably the highest that Bitcoin is going to be for all of 2026. So what does that mean? It means in the short term, if we can get a weekly close above about, again, 70.2K, but at this point, since we already had another week that broke below it, we kind of want to be above the previous week, which would be at about 72.8K. If we can break above that, close above that, that makes it much easier for us to get to that 76.2K pivot, essentially. But again, the lower that this weekly SMA gets dragged down, the more likely it is going to form as resistance instead of support, especially if it breaks down through here. It's going to be very hard for us to then break through both the weekly SMA as well as the 76.2K pivot. And the 80K pivot is not reading as a local one, but that's super important. Like very, very important how the price behaves at 80K. And I kind of think, again, that 86 would be like the potential wick, but there's no way that we're getting higher time frame closes that high. Like, it's not going to happen. It's going to be like this, where it's like touching it, but it's way above or below it. And in our case, it's going to be the opposite. It's going to be the candle close is down here and the wick is up there, is what I would expect is more likely to happen. So in the short term, that's what we're waiting to play out, is by the end of this week, this SMA will be pulled lower, and it may literally be right on top of this Fibonacci pivot. So not only are we going to have the price interact with the Fibonacci pivot, but it's also going to have to react with the weekly SMA favorably, which we do not have a ton of history for it doing at this stage of the cycle. Where is this? This is the end of March. And it's a very similar circumstance to now, where the weekly SMA has broken down below that Fibonacci pivot, forcing this to act as resistance instead of support, and then it fails. Now, we don't have one for 2018. I don't have Fibonacci pivots that go back that far, but you can imagine that this is pretty similar. This is a little bit later in April instead of March, because March was down. Pretty much the same thing. You can imagine there would be a Fibonacci pivot here probably, and another one here probably. And what happened? The weekly SMA broke down below that Fibonacci pivot. And what happened to the price? This formed as resistance instead of support. So that's what we have to assume, based on all logic of how Bitcoin behaves, that is what's going to happen. Is this weekly SMA is going to get pulled down to that Fibonacci pivot. The price is going to react to it, probably shoot initially past it, and then it's going to fail spectacularly in the opposite direction and probably continue failing until it gets back to 64. And then it will need to decide, are we ready to break through new lows, or do we chop around until July? That is personally what I believe, is we're going to see a lower high in April, and then we will see one more lower high in July, and then we will be in full capitulation for the rest of the year. So I do think we kind of chop around. I don't know if we break 64K in between then or not. I'm not sure. I could believe consolidation. I mean, if we look at 2022, we see something very similar. This is April, and then it's going down into June, and then July, August is the lower high. But again, that's a lower high that's literally 50% lower than this one was. So that's what you need to prepare yourself for mentally, is even if we do get here to 80K, that means by July of this year, the lower high might be 40K, might be 44K, before further capitulation. I really, at this point, I don't know. I've said it multiple times on this channel. I believe 34 to 39K is the lowest that I reasonably think the price is actually going to drop. I don't know if I believe that still. It may be that we see that downswell in July to 40 or 44K, and then it breaks it a little bit lower in August, and then we're done already. Like it may be like that's the bottom, and anyone who has money is going to dump money into it. I still, personally, if I think about, like, this is when Donald Trump was president last. The chart is like very volatile, but not crazy volatile like 2021. So it's a little bit more predictable, where we had our initial blow off top, which in fairness, we did not have this time. We've had a more consolidated top. We have had a more sharp downturn than this. Although actually, I shouldn't say that. This is, in terms of percentage, is more violent, but it took a longer period of time to happen, or rather, it happened later in the cycle than we would anticipate now. Ours happened in October, November, and we were already breaking through this in November, as opposed to this at least fully gave up the weekly SMA by, January, February. And again, we already had given up by like November, I think, October, like very early. Yeah, October. But we're touching it as of fucking August, September of last year. So we're way earlier that we're dropping. We're not as violent. This was about a 72% drop in 2018 versus it being just barely below the 50% mark at the moment. So we still have like plenty of opportunity for, in the 2018 cycle, we saw again like another drop of basically 50% after the 50% drop, which even if we want to extrapolate that to a little bit more resilient, that it's a 40% drop, whatever, still about a halfway point from wherever that initial drop is, which for us, this would be the same thing, you know, in early February or late February, the 59.9K. This is the same event on the chart. That's why I don't care what the news is. It does not matter to me. What I'm paying attention to is these lows for 2018, 2019 extended all the way into 2019. You know, this would have been a great time for you to buy all through the end of the year. It still stayed pretty low. I mean, who cares if your average cost basis was 3,200 or 3,400? Who cares? All that matters is that you bought as much as possible during that time period. So that is kind of what I'm expecting, is that we see that lower high. Oh, look where this lower high is, July. Look where this lower high is, April. The same thing that we're seeing play out now. I just expect that after July is when we either see a violent drop off or we do see like a more gradual one. But regardless, I don't think it'll actually be the lowest that the price goes to. I do anticipate that the price probably going to go closer to here as its absolute bottom. And that may go all the way into January, February of next year. I think it's a little bit less likely, again, because we broke down so early. So, you know, we could see the full bottom by October or November. Regardless, I would expect an interaction with the 44K pivot. I would be very surprised if we don't see it at all. Like if we form support above that, it's not impossible, but that would surprise me because, I mean, that's all these people. That's all the people who bought in after the highs were already in 2021, assuming they didn't panic and get out during this time. You know, it's past anyone who bought the ETFs. It puts those people into losses as well, even the earliest buyers of the ETFs. So I feel like a bear market is not fully complete until everyone is in pain from the recent cycle. And that has not happened yet. You know, these people came in 2024. They have not experienced true pain in a Bitcoin cycle, nor will they really. If they're not in profit for a period of 3 months, but they have been for the last 2 years, like that's not really that big a deal. That's an opportunity for the intelligent ones to buy more, or for the fearful ones to sell all of their IBIT and MSTR or whatever the hell else they have exposure to instead of actually just holding the Bitcoin themselves. So that's locally what we have to look forward to is probably a lower high in the end of March or early April, followed by a failure of the weekly SMA. That will drag us down, probably back to the 64K pivot, possibly even down towards that 44K pivot, and then another lower high in July. And then I would imagine the final move of the year goes. Again, whether it's below 44K or not, does not matter. If the price is below 64K, you should have a plan to buy as much as possible, basically. I do think it's going to go lower than that, but I think it would be very silly to not have cash ready as we are reapproaching those levels. All right, let's go into the trade. The sad trade that I am wasting all this time. I like literally could have gone and done like 4 other trades at this point. This is when I entered. I entered correctly with a short, and then I panicked and flipped it, and I've been in loss this entire time. I believe I've lost like $30 on it. I'm still sitting, I think, in like $60 worth of loss or something like that. I'm not really worried about it. This looks like an uptrend to me. I'm just waiting to see, does it get back to break even for me, which I believe it will at the moment. And then pretty much I'm prepared to sell as soon as the chart tells me to. Like as soon as I get another one of these, I'm probably going to sell. But yeah, the really interesting thing to me about these perpetual contracts is like I've tried trading the IBIT option contracts, and I've been directionally correct and lost money. And I've been too early and I've lost money. And I've been a little bit too late and I've lost money. This perpetual contract, however, I was correct, and then I panicked and made a poor decision. But I was correct and would have been in significant profits if I had just listened to the rules that I set for myself. Whereas I was never able to do that with like iBit or anything else. Like I could set rules all that I wanted, and sometimes the price just wouldn't behave. Like iBit doesn't behave exactly the same way that Bitcoin does, for example. Whereas Bitcoin is Bitcoin. Bitcoin does exactly what the chart says that it's going to do. So even in this instance, that's why I didn't panic. As I think at one point I was like $200 in loss down here, like basically like half of my position. And I didn't panic because what these indicate is upside. And now it might not be violent upside, but that is what that indicates, is that this is a long entry. Had I already taken my cash out, I would have longed here and sold. And then I would have longed here and just waited, you know. So even though I had a terrible entry right now, I'm still directionally correct until we see a major failure at those levels, which we very well may. And again, pretty much as soon as I'm back in profits, I'm going to take them. There's a possibility that we fail off of that level and that I don't see them, but I don't think so. I think we get at least one more attempt towards 74 before we call it quits. And again, as I explained in the rest of the video, it is my assumption that we are going to go as high as 80K between now and the end of March / say middle of April. So I need to be prepared. Worst case scenario, if I have to lose 20 bucks on this trade just to get out of it, like I don't really care. Like obviously, if there's a significant failure, like right at around my cost basis, then I'm not that concerned about it. I just want the money back so that I can enter other trades. And that really, I would say, is my biggest lesson from you. Obviously, you could only choose to trade higher time frame entries. You know, you could just load up heavy as shit here and just wait for that move to progress. And that's a pretty nice move. Oh my God, I hate you, sticky keys. Yes, thank you so much. Really increasing the functionality. So that's like a 10, 11% move, but you had to wait a period of weeks or months for that. Whereas this guy over here, that's like pretty much what has happened the last couple of days and what I would have experienced if I just didn't panic and I just stuck with the actual entry. I fucking hate how it does this. I don't understand why it behaves that way. So not quite a 10% one, but still like a 9% trade, a 7% trade in the course of a week instead of having to wait months, you know. So I think it's just a lot better. Obviously, if you're able to time the absolute top and time the absolute bottom, then just sit in that trade, dude. Just sit in that trade and let it ride. But for the rest of us who are not perfect at this or are just looking to basically increase your income a little bit so you can increase your exposure to Bitcoin, I really think that the 4-hour chart and specifically trading off of breaks of either side of the Bollinger Bands is your best bet. They're way more clear entries than anywhere in here, you know, anywhere in here. These are not clear entries. It's a clear exit. It's a clear exit, but it's not a clear entry. This is a clear entry that, again, had I listened to, I would be whatever in like minimum of like 7% profit. I hate you so much. Please do what I ask. Oh my God, bro. I don't know why it's so hard for me to just use the measurement tool. Yeah. Would have been comfortably in like an 80% profit on that trade had I just, again, listened to the indicator. Not listened to, I thought we were going to go higher quickly, and sure enough, what happened like the next day, the news changed, the Straits of Hormuz, all of that happened like right after that. So that's why I really think you have to be careful about trying to trade momentum when we are still in a bear market year. Now I'm not going to say that all wars and shit like that happen during bear markets, but you know, when did Russia invade Ukraine? That was in 2022. We saw a very similar thing where the prices of oil was rising during that time. That was not when gold was having its major rush, so it's slightly different in terms of like global macroeconomic factors at the moment, but we kind of can expect the same thing again, where Bitcoin is going to have its local high that results in a failure. And all this really did is this guaranteed that it's going to be closer to 80K than 86K. Like that's what I read that as, is we're just taking out some of the liquidity that we needed to get us to 86K. And I haven't really talked about it in this video, but pretty much anything below 71.5K to about 83K, 86K is very thin on the anchored volume profile. And what we need to wait for is if the psychology of all of these individuals holds strong as we fill out this range. Do those individuals exit and this becomes new buyers? Do these people buy more here, therefore leaving this volume here? Or does this volume start to flow out as we get closer to here, because these people can now take 5 or 10% losses instead of 30 or 40% losses? That's what we're up against in the coming weeks. So just be prepared. Look at this, we're getting a little bit of downside momentum right now towards that 70.4K pivot, like I mentioned earlier on in the video. So just be prepared for short-term pain if we are not able to actually make progress on that 73.7K pivot, which again, like I've talked about a million times in a million other videos, that's based on 73.8K, which is the peak of March 2024. So super important psychologically, both for the ETF buyers as well as just for setting a new precedent with Bitcoin, which is always possible that we can set new precedents. There's nothing really preventing that from happening. Other than I personally believe that the liquidity from the stablecoins does not fully come into effect until next year, because that's my understanding of the law. The law is that they have to start using them by January of 2027, but they have until I believe like 2029 to finalize how they're using them. So it's not that they like have to use them in January. It's just like legally they like are able to be starting by then. Essentially, there's some companies that are already experimenting a little bit earlier, but it's companies like Wells Fargo that are like least trustworthy of like all the other big banks. The main ones that I'm paying attention to are Citi and JP Morgan Chase. Whatever they do is what's actually going to dictate the flow of the market, and I personally believe that is benefited by the price being lower. JP Morgan Chase gets to do a lot more credit card rewards and bonus programs if Bitcoin is down here and they're incentivizing you to buy a lot more of it, instead of if Bitcoin is up here and they're incentivizing you to buy a lot more of it. Now, granted, that's what they'll be doing in 2030. In 2030, when the price of Bitcoin is on its way back to 100K, and to see whether it can hold 100K or not, there'll be a ton of bonuses at that time for you to use X amount of stable coins in order to get X amount of stable coins back that you can redeem on whatever you want, like Bitcoin. Me personally, I believe it benefits the banks for the price to be lower at the time where the stable coins become active, because then they can convince their customers to buy more of the things that are available to them, which is going to be Bitcoin and tokenized assets. And actually, that's what I'll end the video on. So like and subscribe. Thank you so much if you're still listening to this part of the video. Basically, when they tokenize all of these assets, when they tokenize NVIDIA, when they tokenize Google, Apple, Meta, etc., and they'll be able to trade them 24 hours a day, why on earth would you trade a picture of a dog? Why on earth would you trade Fartcoin? Like all of the liquidity that people are expecting is going to flow back to the altcoins at some point. I think that there is a possibility it will flow towards the ones that do something, but the days of like just complete ludicrous memes being like an actually reliable way for you to turn a small amount of money into a larger amount of money, I think are gone. Like we will see the liquidity come, but it's a lot of it is going to flow to Bitcoin and even other things. Like it's going to flow to like Litecoin and Algorand and like random shit that like doesn't matter, but it's still going to get the bulk of the money instead of memes and everything. And then the memes are just going to get like the fat that's skimmed off the top of those like 16 coins that they say are commodities now, which most of them I don't think you need to focus on. Like, if you don't have enough Bitcoin, that's what you should be focused on buying. You should not be trying to buy other things because they might go up by more and then you could buy more Bitcoin with it after. It's like you're adding so many layers of complication to a very simple task, which is just buy more Bitcoin and increase your education on Bitcoin so that you can buy more of it, you know, by profiting off of the price or understanding the price. You know, like by looking at the Bitcoin chart, I can have a better understanding what MicroStrategy is going to do, or what Coinbase is going to do, or what Robinhood is going to do. You know, they're not directly correlated, but it gives me kind of a window to understand. The same way where if I want to know what Tesla or Microsoft or Apple or anything like that is doing, I want to look at the SPY chart. I want to see what the index is doing, and then that's going to give me a little bit of a hint of what the other stocks are going to do or how they're going to perform. And obviously there'll be outliers in any of those scenarios, but you have to form that basis off of something. And if you don't already have that strong basis on Bitcoin, you're not going to understand why Michi and Popcat and like all of these other memes that, you know, become relevant and stay relevant for a little while and then drop off the face of the earth. You're not going to understand why they're behaving that way if you can't understand the Bitcoin liquidity cycle. So there will come a time probably where memes and alts are relevant again. I don't know that it's worth it anymore because it's going to be harder to predict than it ever has been. And I think so much of the money, when stablecoins are being printed by banks instead of companies like Circle and Tether, Circle and Tether are crypto native. They have every reason to want you to take the stablecoins that they issue you and do something on the blockchain with it. JP Morgan Chase and Citibank don't give a shit about that. They don't care. If they can get you to take your stablecoins and use them on the down payment of a house, they're going to allow you to do that. If they can get you to take your stablecoins and go get a car loan or put a down payment on a car or whatever, you know, that's what they're going to incentivize you to do. That's what they're going to want you to do because it still keeps your money in their system. I will be very surprised, you know, to the point of what I said earlier of like, I don't know how simple they're going to make it for you to take your stablecoins and immediately buy Bitcoin. I would imagine they're not going to be buttons that are right next to each other. You know, like I think that they're going to want that money to flow towards whatever the largest shiny object is, which is still going to be homes. You know, I'm not going to rant on my opinion on the housing market, but I really think that like they are going to try and get you to spend as much money on those stablecoins as possible, and they are directly incentivized to have a hand in where the flow of that value goes, which means they're going to focus on the things that they already understand, which is going to be things like tokenized Nvidia, tokenized Apple, tokenized Google, etc. Once money can flow into those assets 24/7, it's going to be a while before we see the liquidity flow down to things like meme coins and altcoins. And meanwhile, that whole time, Bitcoin is going to be eating up that liquidity once it's done with its cycle, which again, I would imagine is sometime between October and about February of next year. By then, whatever bottom we'll be in, we'll be back on our way up. You know, the news story, if they can only run one news story for 2026, it's how low can Bitcoin go? If they can only run one story for 2027, it's can it get back above 100? And then we are back to the races in 2028 and 2029 to find new price discovery. But it's going to be pretty boring until then. So that's why I think it's good for you to learn a skill. This is a pretty forgiving time to be learning short-term perpetuals trades. Like I said, I mean, I've lost lots of money doing option contracts and meme coins, and even being incorrect here, I haven't really lost that much on the perpetual trades. It's cost me very little to do this. I'm not even like watching this trade like a hawk. I'm pretty much just being patient until I see the levels that I need to see. and then I'm taking it out of it. So definitely something where if you have questions, feel free to leave them down below. But I am starting to really prefer this over other styles of trading, and it really is mostly, I would say, dictated by your position sizing and your actual access to margin. Like if you have a large sum of money, it is not hard for you to be able to make money off of just trading 4-hour swings. It's pretty easy, honestly. You just have to be militant about your entries and realistic about your exits. So I will talk about that more later on in the video. Hopefully by Friday's video, I will be out of this trade, but I doubt it. It'll probably be maybe Sunday or later, depending. Not super worried about it, but yeah, I'll keep you guys posted. Again, if any questions, let me know down below. I'll see you on Friday.